Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital, and typically joining me would be Michael Becker, but he is on another due diligence assignment, so we wish Michael Becker a lot of luck in putting together his next acquisition. So good luck with Michael. Things that we want to remind you of before we get going in the podcast is don't forget about our 17-page white paper report on structuring multifamily financing. This is kind of I would think, a great schematic diagram of how to put transactions together. So go into the Old Capital Podcast website, click on to try to get the 17-page white paper report. I think you'll really enjoy it. The second thing is don't forget on September 13th of 2018 will be the Old Capital Multifamily Conference. It's an all-day conference. As you know, it's going to be at AT&T Stadium. Make sure you jump on a Southwest jet, come to Texas, take advantage of that. You'll find a great networking of opportunity, a lot of people in the multifamily business, whether you are a listing agent that you want to meet or an investor that you want to maybe meet other investors to kind of figure out what the market is about. This is a great event. And as you have heard, Roger Staubach is going to be our keynote speaker on that one. And we're very proud to have Roger with us. And so in the podcast today, we kind of have an old friend that was in the podcast with us probably about a year and a half ago, 2 years ago. How long has it been?
I think less than that.
So it was one of our most downloaded podcasts because he is an enthusiast. He really has the passion. He's a guy that a lot of people look up to. He's a guy that I'm proud to call as a friend. We've done a lot of business together. And I want to kind of get his sense about what's going on with the market, kind of figure out if you're a newbie trying to get into apartments, to listen from some guy that is pretty damn knowledgeable. And I want to bring on to the podcast, Beene. How are you?
Thank you, Paul, for that nice words of introduction. And I'm very good. I appreciate the opportunity to come and speak with your audience and share some of my experiences so they can be more successful, faster, and better than I.
So let's go back. Maybe some people have listened to it in the past, your podcast, but let's kind of talk a little bit about what your background is. I mean, we're sitting in Fort Worth, Texas. You're a Fort Worth, Texas kind of guy. Tell me a little bit about your background.
Absolutely. Let me give you the 30-second sketch and we can fill in from there. So I'm from Fort Worth, Texas. I grew up here. I went to high school and graduated from Fort Worth, and then I joined the Air Force. I went to the Air Force Academy in Colorado Springs. And from the Air Force Academy, my first assignment was flying, and that was in 1992, and I've been flying ever since. I've flown in the Air Force active duty for 10 years, and then right around 2000, I separated and I joined the Air Force Reserves here on the west side of Fort Worth, and that's where I currently am fully employed in the Air Force.
So what do you do when you say you fly? What type of plane do you fly?
That's a great question. I have the best job in the entire world, and just yesterday I was flying, and I can only tell you after 27 years of flying, when I took off yesterday, it was as if I had done it for the first time.
Is
a
that
smile
right?
came across my face. It was almost like Christmas when you're a young kid, and it's Christmas every day. So I absolutely love my job. I'm an F-16 pilot for the Air Force Reserves, and I try to describe this because a lot of people ask me. And so the way I describe it is I get to spend several hours of each week on a roller coaster with no rails. So if you like roller coasters, then you would like my job.
So you're telling me that flying the F-16 is a lot of fun.
I can't tell you how much. Yesterday, I got a chance to fly with an Air Force Academy cadet for the very first time. And boy, the smile on his face, I don't think it's going to take him months before that returns to a straight smile.
That's great. So how did you transition into multifamily? I mean, were you in single family first, and then all of a sudden you decided to get into multifamily? So how did you make that transition? How did you get into it?
Great. So When I was in the Air Force, active duty, you can't stay there forever. So I separated and went to the reserves. And most of the reserve pilots were airline pilots. And that was my path. I was going to go to the reserves, and then I was going to become an airline pilot. And then September 11th happened, and then the airline industry stopped hiring, and they didn't hire again for a long time. And so at that point, everything I had been targeting and everything I had been working for kind of came to a stop without anything I could do about it. So my aspirations of commercial aviation was over. And so I had to find something really kind of transition to in the next stage. And I was looking, 5 to 10 years down the road. And so I knew that I always enjoyed around my house making projects or improving my house. And so I noticed in my neighborhood a home that was vacant, and I bought it. And this is right around 2000. And I made some improvements, just some minor things, and rented it out. I learned a lot of lessons from that and a lot of mistakes. And then from that property, I bought another one, and I bought another one. And I had a collection of about 7 or 8 single families that I had been able to be successful in making some small repairs, nothing too big, and renting them out and making a little bit of monthly income. And then after several years, I saw, boy, this is really advantageous to be an investor and to try to process some of the things I was doing myself. And then that's right around 2007 and 8. And that's when the lending requirements changed and the opportunities for single family investing and the cash required and the attractiveness of that kind of dwindled because the lending changed. And so at that point, I didn't really qualify for any additional mortgages. So I had to basically go to multifamily. And that's kind of how I got into my multifamily approach. And from there, I still took that single family mentality. And this is a point I'd like to make to a lot of people that are trying to transition from a background of single family or a different background from multifamily, is you can't take the single family, do it yourself style of attitude. That's just not likely to work very successfully. And so that was one of my first lessons, is to think a little bit bigger, think a little bit more of a team process. And from the time I stopped buying single family and started to try to buy multifamily, it took me about 2 years before I learned that lesson and before I started to really kind of surround myself with a good team. So for a 3-year period, I tried to buy a lot of things. I was unsuccessful in doing so. And then through the association of qualified people and good instructors, I was able to get a breakthrough and start buying or making some improvements, making some more successful attempts at buying and learning more about it. So that developed into making some initial acquisition successes and turning those into successful projects.
So we've talked on the last podcast, a property that you first bought was called The Heights. And for people who didn't hear that, can you just kind of give us a brief overview on The Heights? How did you find it? Tell us a little bit about the background of who owned the property and why they were selling and all those good things.
Sure. The Heights was the very first acquisition that I sponsored. And I had been looking for multifamily of different sizes and of a certain price point for several years. And I had made a couple of offers on them, but they were all unsuccessful because either outbid, I didn't understand exactly, the market and where I needed to price my offers, or I just didn't have enough money to put together to purchase those. And so I had been looking, I had been making as many contacts and relationships with people in the market that I could. And I got an email, basically an advertisement about the Heights. And I looked at it. Initially, I didn't think that it was something that I was going to be interested in because it's a smaller property and it was an older property. And everyone told me, don't buy small properties, don't buy flat roofs, don't buy properties with older style core systems like a 2-pipe chiller, which is what this was. And so when I looked at it, I thought, this is not really something that I've been advised to purchase. And then I looked at it a little bit more. Another friend of mine said, hey, you may want to look at this. It may have some advantages. And the number one advantage was location. It was in an area that was very attractive, high quality area in the west part of Fort Worth.
What were some of the single family homes in the area? What's the valuation of those?
Right. The whole area was turning around. And some of the homes had been there for a long, long time, 1930 and 1940 and 50 construction. So it's a real historical area, a very beautiful area. And I would say the average home residential price in that area is upwards of 400,000 above that, and then probably all the way into the 7-figure point. So there a lot of money, a lot of high quality properties in that area. And then the property that I bought, the Heights, was in some ways unusual because it was situated very closely or in the middle of a high priced residential area. So I knew that the people that could pay a little higher than currently we're paying were in that area and they wanted to live in that area.
What were they paying? What were your tenants when you bought the property? What were they paying?
That's probably not a fair valuation because the property was so poorly maintained. It's a 1960s, and I described it earlier. It had flat roofs. It had siding that was just worn out. It had the core systems, the HVAC, the plumbing, the electrical that just hadn't been cared for or maintained. And so as a result of a poor quality product, the people were paying well under market rents. And the rent that they were paying was $500 to $600. And the property 10 feet away or just adjacent to it, they were at $1,000. So they were 50% or less of the market rent.
So you'd say it was the dog in the neighborhood.
Absolutely. Absolutely.
So,
a dead dog, if you will.
So the seller was selling and seller was not really located in the state of Texas. How many times did the seller come to Texas to even take a look at it?
Right. That particular one, I know he lived in California, and I don't think he had been to the property in a long time. I know he hadn't spent a lot of money to improve or maintain the property, and it certainly showed signs of that.
Yeah, he was just deal fatigued. I mean, he bought it, probably owned it for 10, 12 years, never put a lot of money into it. He kind of used it as a cash register. And now there was an opportunity for you to buy the property. But the property wasn't really a stabilized property. It was more of a value-added property, just like we were talking about, rents $500 versus next door neighbor being $1,000. How much money did you guys have to come in to rehab the property? How much was that?
Quite a bit. So
again, how many doors is this again?
It was 22 when we started. And then there was a lot of mismanaged space and a little closet here and an office space here that was unrented. So we turned it into 23. We turned that one unit that one office space into an additional efficiency. So we started at 22. We have 23 now.
Because really you don't, this small of a property, you really don't need an on-site manager on the property. So if you can kind of manage it from a distance. Today we have the internet and apartments.com, and you can have a telephone number out on the advertisement to have somebody call somebody that can come by and show you the unit. You don't need to have an employee with an employee expense with taking up space where you can turn that into a revenue unit.
And Paul, I'll add to that to say that you use the word, you don't need it. You don't need that capability. And I would say almost that that's what's required in today's market, because the people that are renting today to make the majority of their decisions based on internet, or they're based on some type of online research. And so if you don't necessarily need that, but you certainly need the other aspects of that, which is that online presence.
And you did a bank loan on that transaction. And why was that?
So we did a bank loan through a local officer here. And the reason was because we had quite a bit of repair budget that was required. And then we also had a whole different demographic for the tenant base that we were going to put in place. We were targeting the M&Ms, the millennials and the midlife crisers. That was our target market when we, with the vision that we were going to implement, and the tenants that we had in there, they weren't going to be the ones that we were going to target at the end of the project.
So the money that you put into it, where did it go? Tell us some of the improvements you made on the property.
Right. So we bought the property at just a little bit over $1 million. And then we needed about $500,000. So for every dollar we bought the property for, we had to put 50 cents into it. And when I first proposed that idea and we kind of got the budget together, I bounced that off of some of my peer investors, and they were shocked because they said, I don't know what you're doing. That's way too much. We think you can do these rehabs for $3,000 to $4,000 per unit. And we ended up spending almost $20,000 per unit. And so the whole concept was much larger than my investor peer group was attacking, because it was, in some cases, sheetrock off the wall, studs, let's start over. And in other cases, we didn't need all of that, but certainly it was a very expensive repair budget that included taking care of the structural problems, the exterior conditions, and then the parking lot. I mean, pretty much everything. The roofs needed to be done. And then, so those cost things don't necessarily increase rents, but you have to get them done if you're going to maintain the property.
Yeah, instead of doing a paint evasion, instead of a renovation, the paint evasion is probably what some of your peers and some of your investors were talking about, keeping the windows the same, not blowing out beautiful walls and cabinets and kitchens. I mean, you knew that you wanted a different tenant base, a completely different tenant base than it currently was in the property. One that was not going to pay $500, but one that could pay $1,000 or $1,100. So how long did it take you to rehab this smaller property? And did you do it yourself or did you contract it out? How was that done?
So the project from start to finish was start to construction completion was just a little over 11 months. And we vacated, or we tried to manage the vacancies, because this wasn't something that could be done on a turn because of the extensiveness of the amount of work that was required. So construction was just a little over 10 months. We hired Legacy Construction, and they did a fantastic job, and they managed it in conjunction with my property manager, who also did a great job of managing the vacancies, getting those vacancies turned quickly, and then trying to get some of the higher paying tenant base in there and trying to get that populated. So from the time we bought it until the time we finished construction was about 10 months. And then it took us a month or two to kind of get it leased up. So by the 12-month or 13-month point, project was 99% complete. The new tenant base was solidly rooted into the property, and we started to benefit from what I mentioned before. We had went in extensively and repaired all of the parts behind the wall that you don't see. And as an investor, and as the new investors listening to this, they need to realize that there's a lot of expense in the wall, behind the wall, in the plumbing, and in the electrical, in the windows. And if you just walk in and you say, well, I'm going to put new shades up, and you don't look behind the shades, or you say, I'm going to put a new light fixture up here, and you don't realize that that type of light fixture may not be at the correct circuit rating. Some of those expenses are hard to calculate, and that's why you need to pair yourself with a good team members, like a property manager who has that experience, or a construction manager who knows that this age of plumbing or this core systems are costly to repair. It may be more advisable to repair it now than later on, just continually nickel and dime maintenance cost.
So tell us the benefit that you had by doing it the right way, by really doing a renovation of a property, not just a paint evasion. What did you do for rents, where they are right now? And tell us a little bit about the rewards that you've had on the property.
Right. So this is a underestimated benefit. So number one, easily, when you go in and you do what's necessary to fix the plumbing, to fix what you don't see in the walls, that results in less maintenance and less repair costs in the future. So that's the number one benefit. The cost benefit is if you can repair it today, it's going to be pennies on the dollar for having to come back and repair a water leak and fix other issues, and then try to compensate the tenant for getting their television wet. So that's the first thing. But the second thing that's much more subtle is now you have a very good product, okay? And you have the very best product perhaps on the market or in that particular area. And then now you can offer that to a tenant, and the tenant will appreciate the fact that they don't have to call continually and tell you that the drain stopped up, because we've already repaired and taken care of that. And now the tenant is satisfied, because when they move in, they don't want to have any maintenance problems.
Right.
They're expecting it to be completely smooth. And as a result of repairing the heights the correct way and fixing some of these problems that were unaddressed, now the cost is less. But almost as importantly, or more importantly, I have satisfied tenants. And they talk to each other and they say, I really like this place. And then when I go and raise the rents, they say, I really like this place. I don't have any problems with maintenance.
Let's talk about the benefits to your investors. You wanted to pay off the bridge loan, the construction loan, to do the rehab. And then you decided to do a permanent loan because you were going to keep this property for a while. So you did a Freddie Mac loan on the property. So you got a long-term fixed rate on the deal with a 30-year amortization. Did you return some of your capital back to your investors?
Absolutely. So this is the part that I'll lead into that. Give me 30 seconds to explain it. So my business vision is to rebuild apartments, restore community, reward investors. So we talked about rebuild apartments. We talked about restoring the community because now we've got a group of happy tenants that live there, and we do a lot of tenant interaction to make sure that they feel like it's a neighborhood of friends. And just as important as rebuilding a good property and putting doors and nice colors and nice flooring down, they like that. And that's why they come and that's why they rent at the Heights. But the reason they stay is because we restore the community. And we do a lot of things to interact and engage with them in a deliberate manner so that when we contact them, it's not just your lease is up or there's a violation of your lease agreement. We're trying to get them to really show our value and show that we appreciate you being here. We know you have a lot of choices, but we're going to do everything we can to hit the easy button to solve your problems. So step 2 is restore community. Step 3, the question you asked me, reward investors. And that's like a 3-legged stool. You can't take any component of that out and the stool becomes unstable.
Right.
So if we can get the first 2 legs in place, then the third one's automatic. And so we did reward the investors, and it was really a very beneficial financial situation. We basically put about $1 million to acquire the property. We put about $500,000, and that's not the exact number, but that's pretty close. And so at the end of our repair project and the end of our re-tenanting, we were able to get the property appraised at just a little bit under $2.3 million. And then we were able to refinance that, like you mentioned, with long-term beneficial, secured, fixed debt. And we withdrew some equity, and we were able to return about 95% of the initial investment to the investors after all the cost of sales and the other portion of that was paid.
But what you didn't do is you didn't maximize the cash out in the transaction. You wanted to have a lower leverage deal, but you wanted to have, in case something, a rainy day in the future, you didn't want to maximize your leverage in the transaction.
Absolutely. We tried not to get too greedy and pull out so much money that now we can't maintain that 3 legs of the stool. You have to have a good property. You have to spend the money to maintain community. And then that's going to continually reward the investors with a strong monthly cash flow or a position that you're not pinched.
And so you rewarded the tenants. They rewarded you with higher rents. You rewarded the investors, and they rewarded you with wanting to put more money into other deals. And who else rewarded you recently?
So this property really turned out well. It was the construction. I mean, our management team, our construction, the vision for it was just right on target. And as a result of that, we nominated the property through the Apartment Association of Tarrant County. They have the Lone Star Excellent Awards that recognizes professionals in the industry, and it also recognizes properties. And so we nominated the Heights for that. And surprisingly, with very, very difficult and fierce competition.
And I'm talking about, there was a lot of competition. This is a small little property, so to speak, but you were up against 100 units, 300 units, Class A properties, Class B properties, people that have repositioned properties. And these are major players in the Fort Worth area that own, we're a part of a large metropolitan area. Fort Worth has a couple $100,000 of apartment units, and this little 20-some unit building won Apartment of the Year. And I was at the big meeting, sitting at another table, and I was actually walking out because it was the last award to be announced. And I was like, what? What? Lane won Apartment of the Year of all these apartments? And I had to rush back in, and it was amazing. So there must have been 12, 13, 1,400 people at that dinner meeting, a big award ceremony, and I was taken back. But, he did a great job. And if you want to see this property on the internet, what it looks like today, what's the best way? What's your website address for this property?
It's theheights76107.com.
One more time.
Theheights76107.com, and that's the zip code.
So this is the Fort Worth, Texas, Tarrant County Property of the Year. Of all the major properties, all the major players in the Dallas-Fort Worth area, and this little flyboy beat them all at the game. So he got rewarded, the investors got rewarded, and the tenants got a better property with the neighborhood. It was very appreciative of how hard and the work that you had done to the property. Anything more to add to that one?
No.
Let's go to property number 2, the Barclay, and tell us a little bit about this story. How old is the property? How many units? Tell us a little bit more about the Barclay.
This is a great property, Paul, and I really love it. It is so unique. It's 1927 castle is how I describe it.
1920 Castle.
Castle. It's built in 1927.
Wow.
And it's on Forest Park. So it's anybody that's ever driven to the zoo or been to the Fort Worth Zoo, you've been right beside it, and you probably even drove right by it. It's a French Tudor architectural style, and it is just significant. When you drive by it, it's almost like a cornerstone.
Yeah, it's a beautiful property. Big,
beautiful.
tall, matured trees, neighborhood, $500,000, $600,000, $700,000 homes. And you bought this how long ago?
So I bought this in November of 2016.
Okay.
And I want to tell you a little bit of the story about this, just to show you sometimes what's necessary to find these and acquire these properties. I was introduced to the seller. He didn't really want to market it because, again, this was an individual who lived in Oregon, and he had owned the property for 15 years, and he had been to the property one time the day he bought it, and he hadn't been back.
Wow.
But he knew that he'd heard, that apartment buildings in Texas are going up in price, and so we talked it for the very first time, and he talked about a price, and it was just too much to pay, including the repairs that would be necessary. And I say repairs, not upgrades, but repairs just to keep the place functioning.
Right.
And so we talked on the phone and developed a pretty good rapport, and we just weren't going to be able to get to the price that he wanted to get, and I wasn't going to be able to afford it.
Is that unusual that you were able to talk with the seller directly?
It was an unusual situation, and the reason that happened was because I was in the midst of deploying on a military assignment, and so this kind of had to get done pretty quickly, and it kind of unraveled a little bit with he was going to be at this price, I wasn't going to be able to pay for that price, and so he just basically said the deal's done. And after a short period of time, I thought I just moved on, but he reached directly back out to me. This was initially brokered through a local broker, but he initially spoke to me and said, maybe we can get something done. And so I went back to the broker and said, this gentleman has contacted me. I want to make sure that this is done in the right protocols. And he said, yeah, just go ahead and talk to him. And so I started a conversation with him on email. And even when I was deployed to Afghanistan, and I talked to him for 6 straight months, and we developed quite a friendly relationship.
That's great.
And an older gentleman, he was in the service too. So we had a lot of commonality. And I just kind of talked to him for a long time and developed a sense of trust with him. I trusted him. I liked him quite a bit. I wanted to come up with a solution that was satisfactory to him.
Yeah.
And at the same time, that would be beneficial to me. And so this went on for a long time. I know about his dog. I know about his wife. I know he's a fireman, a great guy. And then eventually I just said, Gary, whether you talk to me or you talk to somebody else, they're going to bring these problems up that I'm telling you about. The roof needed to be repaired and this needed to be fixed. And it's going to have to be, either you're going to discount for it or you're going to have to fix it yourself.
Right.
And let me do that for you. And we got right down to the last wire, and he just said, yeah, Lane, I'm going to do it. So the point on that discussion, or that point on that topic, is sometimes you have to show a little bit of grit and persistence and hang on longer than the next person, because not every deal falls into your lap.
Sure.
And you have to be a good investor, you have to see the benefit of that, and you have to cultivate that opportunity.
Right.
Very rarely does it just fall into your lap, unless that happens sometimes, but you really have to see with clear vision, and you have to be persistent. And then the most important thing is it's about a relationship, and you have to be genuine. You have to be honest, and you have to look for their benefit, because if you try to come in and cut their head off and get every nickel you can off the table, well, one, that's probably not going to be successful.
Right.
And secondly, you're probably going to get a reputation for that. And that's certainly not the way I would want to be treated if I'm a seller. I want to be fairly compensated for my properties And that's what I really try to treat everybody. I want to give you a market price for a market property. If there's problems with it, then we'll either discount that or you can fix it.
Right.
But I'm going to give you a fair price, and I'm not going to try to take every nickel or every ounce of blood you have in your body.
So you came together for a price on the property. And again, go and tell me a little bit about the property itself. What type of rehab did you have to do with the property? And what did the tenant base look like before to what it looks like now?
Right.
Yeah.
So we could almost just rewind this podcast and describe the same thing as the Heights, because it was a lot of work, a lot of behind the wall work. You can imagine what a 1927, just the cost to keep that thing running correctly. And there wasn't a lot of that done. And so we had to come in and do it. But the beauty of this property is it's a 1927 French Tudor castle.
Yeah.
And one, they built it out of stone, and it's going to be there for a long time. And secondly, it's beautiful, and there's just nothing comparable to it. You could build something 2018, and it just doesn't have the culture or the character that you do this. So I told the contractor, I said, there's only one thing that is absolutely non-negotiable, and that's we're going to keep these original 1927 oak hardwood floors. And I don't care what you have to do, we're going to keep them in here. And so they did. They resurfaced them, and they look dynamite. And the walls, things like this, they're not sheetrock, they're plaster. And so we had to find some really creative ways to repair it and modify it. And it's remarkable because it may not be for everybody, because certainly it doesn't have all the amenities that a 2018 or a newer property has. But in some ways, it outclasses those because of the character of a 1927 building, and just the feeling of it is just so warm and so at home.
And how do you manage that property? Similar to the one on Heights, there's no property manager on property.
Small properties again. So I'm lucky because these are closely located, and this area has so the area that we're describing in Fort Worth is a historical area. There really isn't much land to build new property unless you want to just bulldoze something. Mm-hmm. And there hasn't been any of that in the last 2 decades. Now, certainly there is a lot of that's occurring in this area. But these older areas, you don't find properties that are 100 units or 70 units because they just didn't build it in 1930s or 40s. That
Right.
wasn't the population. And so you find these smaller units, and as a result, you have to kind of join up with if you can get a collection of small clusters of buildings, then you gain some of that economy of scale back. And so these two properties, the Heights and the Barclay, are just separated by a couple of miles, and it's convenient for the manager to go there and look at things, or the maintenance man to go and do those things. So we kind of cluster them together.
Now, this property, it doesn't have a pool. It has light amenities. How did you make a sense of community on this property?
So you're exactly right. It doesn't have the amenities that they have now. It has 2 buildings, and the website, if you want to see it, is Barclay Apartments 76110. And you can go there and you can see some dynamite photographs, but it has 2 buildings. It's 17 total units, and it's a 8+9 building configuration. So the 2 buildings are separated by 30 meters. And there's a long, what I coined an outside hallway when we got there. There was a little walkway, and that was it. And there was some foundational shrubs beside each building. And so there was no amenities. There was no draw. There was no community. People would park their cars. They would walk to the outside hallway to their units, and then they wouldn't know each other. And so what we did is we thought, let's go back to Queen Elizabeth's periods. How can we make this an English garden? And so we walled off the front with a really nice facade of stone that matched the 1927 build.
Beautiful.
We put a nice cedar fence. We put a strong wrought iron gate there, and then we enclosed it. And between that little building section, for the length of the properties, we made the perfect English garden. And so now, in the evening or when the sun shades that area, it's the perfect English garden, and it's just beautiful.
It's
and
just
people
gorgeous.
now sit in there. Community, they sit down and they can share a cup of coffee in the morning, or they can share a laugh in the afternoon, and they stop. And then that's the joy of seeing how you restore community. And it didn't take a lot of money. What we did there in a fairly small area, it did not take a lot of money, but it added so much value to the tenant's life and to their quality of life that they just love it.
Yeah, and you also added, was it a fire place or fire pit over there?
Fire pit
then,
and some.
Then you also did place to grill up some steaks too. So, we love sense of community on these smaller properties because that's how you get the tenants to stay. So you don't have a tremendous amount of turnover, that you can push rents up. When people feel that they're at home, like their old home, that they had a good comfort level with, like a big bear hug that their mom and dad would give them, they tend to stay a lot longer. So we can push rents up, we can keep turnover lower, and our costs remain a lot lower, and it benefits to the bottom line of the operations.
And I would add to that, Paul, too, to talk about small property strategies, is you hit right on target there. Is small properties can't compete on the basis of amenities.
Right.
And if you try to, you're going to lose to a bigger property. And so my strategy was to zig when the competition zagged.
Right.
And when the competition, like a big strata or a big apartment complex, would put a nice feature in, I didn't even compete with that. But where they can't compete with me, since I have a small community, is to cultivate that community and make it a sense of home, like you mentioned. And people stay there not because the pool is nice. They stay there because their friends live next door.
That's right. So what's your plans for this property?
So this property is dynamite. I'm going to put it for the next award. I think it's in many ways superior, and I just love that. So many people, in fact, want to live there. They're actually trying to sabotage the current tenants so that they'll move out, but we don't have any more vacancies. From the time we got it, the last 5 production units came to completion within 3 days. And I thought, oh my gosh, we're going to have to rent 5 units, and we're approaching the winter time frame. And these things are going to stay, vacant for months and months and months.
Right.
And we'd already gone through a big period of turnover. And so we needed the cash flow. So they came to the market, we got them rent ready, and they rented 5 properties in 48 hours.
Wow.
All of them like that. And since then, we've been 100% occupancy. We push the rents up, and people just say, I love this place. It's the ideal location. The historical character of it is unbeatable, and it's got a great community.
Your investors, are they getting a cash flow on this property yet?
So that third leg of the stool, reward investors, is coming. So we just got the property stabilized to 90% in November, and so we're now ready to transition to that capital event where we're going to look to try to refinance or put something like that in place.
That's great. So, these little properties are very profitable, or can be very profitable if they are operated correctly. Let's talk about your number 3 property. If you have anything more to say, number 2, we can listen to that. But number 3, tell us a little bit about the property up in Denton.
So this was a purchase that I made in the summertime of 2017 in August. And it was I'd looked for a property up there because my son was going to school up there. And so I had an interest in there. Plus, that's a great area. Denton is a really growing area and very attractive for investors. And so I had looked around. I had been in contact with people to look at some things, and this property became available. It had been on the market for a while and had fallen out of contract, and there were a couple of other issues surrounding it. And so it was 35 units, and it was a 1985 property, so a slightly different model than the 2 previous ones that I had purchased. And I was able to talk to the seller, and I felt we got a fair deal on it. And I would say it was more of a core plus strategy where we could come in and operate it with a successful cash flow from day one, but we could also benefit from some appreciation and some improvements. And so we did that. We took it over. We kind of changed the management protocols and procedures to kind of get this type of tenant profile that we wanted. We raised the rents a little bit, and then we made some improvements, mainly to the exterior part of the property because the interiors were in pretty good shape.
So tell me a little bit about, the exteriors, because you bumped out some of the backyards on that property. Were you able to get some higher rents? And tell us the reason why people do that.
Right. So, and really any investment, the things I look for is I go into the property and I think, what is the unusual or what is the special feature about this property? Does it have a lot of open space? Does it have nice architecture? Is it located in a very nice area? And what I try to do is I look for that special feature and then I try to accentuate that. What can we do to accentuate that feature of this property that makes it stand out, that makes it rise above the noise of a commodity? Mm-hmm. And this particular property in Denton was very open. It was very spacious. There were 5 buildings. It's 35 units, and it was developed in the 80s. And it had quite a bit of green space. It had maybe an acre almost of open green space. And we came in there, and of course, that's not as efficient. We could put more units in there. But what we did...
And it's surrounded by a bunch of large apartment buildings. So this is a small little 35-unit building, but there's your neighbor next door. How many units is in that?
More than 100.
Yeah, 100.
On all four corners, or 3 of the 4
so
corners.
You're surrounded by a bunch of properties that have pools on them, amenity places, workout facilities, all kinds of these different things. So again, with that theme of building a community, keep talking.
Right. So, and what stood out that made this property different from that competition or the noise was the open space. And so we developed a plan, or vision basically, to turn this into a wide open, relaxing environment. And that's what we did. So some of the exterior features, of course, we made improvements to the siding that was in bad condition. We repainted it a really cool 3-scheme color paint. And you can find this on the heritageheightstownhomes.com if you want to look at the paint scheme. But the buildings were a little bit flat, like a lot of the buildings are. And so we added some winged fences on some of the frontal portions of the property. And then on the back, we added some closed patios with cedar fencing. And it overall gave the property a 3-dimensional look to it. And the paint scheme just really makes it stand out.
Certainly does.
And so now when you're standing in our parking lot, and then you walk to the property right next door, it's completely different. One property, ours looks, when I was there the other night, it was in the evening time frame, and I thought, this feels like a residential area. It doesn't even feel like an apartment complex.
Yeah, these are nice looking, like townhomes.
Absolutely.
Versus a stacked garden style apartment building like is right next door. So these have a real warm feeling to them. Like you can spread out and have a backyard and have your dog outside in your backyard. Or you can walk to. You guys built something in the center there. What
we did? We added a swing gazebo.
A gazebo.
Yeah, and so it's a gazebo. It's pretty big, and it's got swings on 3 corners. And I don't know if it reminds you immediately of going to your grandmother's house.
Yeah.
On the front porch swing, and it's just so inviting that even if you didn't want to meet your neighbor and he was swinging, you'd be like, I'm just going to go swing. I love to sit in my grandma's swing, and that's what it reminds me of. And so you're there, you've got a horseshoe pit, and I'm not a horseshoe person, but you're on a swing, you're playing horseshoes, and you've got just some really nice open features. And that's the unique portion of that property that we really highlighted, and it builds and establishes that community. And it makes it stand out from our neighbors, because now you go over there and it's a cluster of buildings. And, you can't push your lawnmower down there without getting stuck. It's so tight. And and cars are parked everywhere, and there's no place to sit, even though they do have a pool or other things. They can go and appreciate that, but not everybody swims. But anyway, that's the important thing, is when you look at these opportunities and they don't necessarily matchbook exactly what you've read in a book, like, oh, it's not 75 units. It doesn't have a pitched roof. It doesn't have this. Well, that's true. There are certainly advantages, and you have to understand what you're buying. But as importantly, you have to look for something unique, or this is my opinion, something unique about that product. And then how can you accentuate that at a relatively low cost, and then feature that, and then market that, because somebody was going to want that. Mm-hmm. Somebody who wants a dog will stay in my property. I guarantee you, because they have a whole acre that's right outside their front door where their dog can fetch a bone or fetch a tennis ball, or they can just sit out there underneath the shade tree.
Tell everybody a little bit about people that are transitioning into your property and how you help them transition into their property with a pizza.
Right.
Tell us a little bit about how what the idea of that was.
Excellent. So my core values for what I run, and I filter every decision I make through these core values when I make a business decision, is to think big is 1. Number 2 is to love people through housing. And 3 is to second mile effort. And I say the second mile, this wise businessman told me this one time. He said, son, there's no traffic in the second mile. And I said, what do you mean? And he said, well, in the first mile, everybody's competing. But when you go into the second mile, there's no competition. Mm-hmm. And I thought, boy, that is good advice. And I know it to be true. We try to do things to get to the second mile. We know in the first mile, the competition is fierce. But if we can get to that second mile, there is no competition, and people appreciate that when you add value to what they do. And so we look for opportunities. Everything we do when we interact with the tenant, we look for opportunities of how can we go the second mile. And one of the things we do is when they come and look in our place, we say, we know it's going to be hard to move. Here's some free moving boxes. We can get those for $20 or $30 and just give them a stack of free moving boxes because that's something that they would have to do.
Sure.
And so we do that. When they move in, we bring them a welcome package that has cleaning supplies. It has bottled water. It has a frozen pizza because when you're moving, you don't have time to stop and get dinner that night. So we put that in the refrigerator for them. And those are very small expenses, very small, less than $100 for what I've described. But 1 month or 1 week of vacancy is greatly over that price. So not only is it a financial benefit for us, but it makes the tenant feel special, and they are special.
Yeah, absolutely. Is there anything else within your vision, your core values, or your mission statement, something that, wrapping up this podcast, that you think is important to kind of teach or talk to some of the newbies out there?
Well, certainly. I believe that the success that I've had has been a result of partnering with good people, associating with high quality people that have a common vision, that want to help people, and that can implement all those core values, mission statement, know how they want to help, know they want to benefit. And that's what I would recommend people that are trying to get into the apartment space, is to associate with high quality people that are in the market and that are doing well.
Well, you can meet Lane Beene at the September 13th Old Capitol Multifamily Conference in Dallas, Texas. Lane, you went to our conference last year. Would you recommend people, again, to jump on a Southwest Airlines and come to Dallas? How was last year?
You know I would. One of the mentors that I like to listen to, Jim Rohn, says you become the average of the 5 people that you associate with or the 5 books that you read. And this is going to give me, it's going to give everyone there the opportunity to associate with other investors and to sound off these strategies with, what do you think about this? What do you think about that? What are you doing to restore community? What are you doing with finances? And that's the sort of benefit. I'm going to love to listen to Roger. I'm going to love to listen to all of the speakers there, and we'll get great benefit. But the true benefit is through the personal one-on-one relationships and networks that you're able to cultivate with this group of very sharp category kings, thought leaders. That's who we're trying to associate. If you can get around those people and you can follow their example, it is difficult, but it's not something new. There's proven strategies of success, and I certainly will show you everything I can do, and Paul and the other people of his time always add value to these situations.
Well, think about that. You've been in a debriefing seminar with Lane. He's standing in front of the whiteboard in his flight suit. He's talking to you directly. He is a standout leader within the apartment industry. Everybody likes listening to Lane. His information that he's received, he shares that with you too. If someone wanted to reach out to you, Lane, get a little bit more information, what's the best email address that someone could visit with you on?
pilot.properties@sbcglobal.net.
pilot.properties@sbcglobal.net. Well, we've enjoyed spending some time with Lane Beene. We appreciate Lane hanging out within the podcast. Next week, hopefully Michael Becker will be done with his due diligence on his new acquisition. So thanks for listening. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.